Hello and welcome to the Deep Dive. Today we're diving headfirst into a topic that's not just making waves, but honestly, it could potentially reshape the very bedrock of global finance and legislative strategy.
That's right.
We're talking about the proposed Strategic Bitcoin Reserve Bill. We've pulled together a stack of really compelling sources, everything from legislative analyses to economic reports, and I promise you, what we've uncovered is truly fascinating.
Indeed. And the material you've gathered, it paints an incredibly detailed picture of what could be, well, a watershed moment. We're looking at a confluence of influential figures pushing for change, the broader geopolitical chess game, profound economic implications, and how this could ripple through the entire digital asset ecosystem, really far beyond just Bitcoin itself.
Right.
It's a chance to really understand how nations might start viewing and managing their strategic reserves in the 21st century.
Okay, let's unpack this then. Our mission today is, to cut through any hype or, let's say, conjecture, to truly get at the core arguments, the motivations underneath, and the potential real-world why behind this pivotal moment in crypto. We want to equip you with the insights to navigate this really complex landscape, so let's get right into the heart of it. Okay, so we start with a very recent and pretty significant development, which is clearly highlighted in our sources. A series of high-profile meetings in Washington that could signal a monumental shift in U.S. financial policy. We're talking about none other than Michael Saylor.
Right, the MicroStrategy guy.
Exactly. Executive chairman of MicroStrategy, arguably Bitcoin's most vocal corporate evangelist, meeting with U.S. lawmakers. But he wasn't alone, right? Other top crypto execs were there too, all converging on Capitol Hill with one singular, very ambitious purpose.
And what's truly fascinating here, and this is really a core takeaway from our sources, is that the explicit objective, the stated goal of these meetings, was to advance what's being called the Strategic Bitcoin Reserve Bill. Right.
This isn't just some, casual idea thrown out there. It's a fully articulated proposal suggesting the U.S. government should actually hold Bitcoin in its strategic national reserves.
Wow.
And the concept is quite deliberately framed as being similar to gold in its function.
Yeah.
That analogy, it isn't accidental at all.
No, that sounds very intentional.
It's a strategic move, absolutely. Positioning Bitcoin within an established traditional framework of national asset management, it elevates it, from maybe a speculative digital asset to potentially a recognized sovereign instrument.
That analogy to gold is incredibly powerful, isn't it? I mean, when we hear strategic reserves, our minds often jump to images of Fort Knox, right?
Sure, vaults of gold.
Vast vaults of gold bullion, or maybe those massive oil depots. Nations typically maintain these reserves for, well, a whole host of critical reasons. Historically, they've been about economic stability, providing a vital buffer against financial crises, or even underpinning national currency value.
You think about the U.S. Strategic Petroleum Reserve, right?
Yeah.
Established after the '73 oil crisis, it exists purely for national energy security, a direct physical asset, crucial for national defense and economic continuity.
Exactly. And gold, on the other hand, has served for centuries, really, as the ultimate store of value. A tangible hedge against the instability of fiat currencies, immune to the printing presses of any single nation.
So the historical context shows us that strategic reserves are fundamentally about sovereign stability, leverage, and managing risk.
That's the core of it.
Yeah.
Nations hold them to safeguard their economies and, frankly, to project influence on the global stage.
Okay.
Now, consider Bitcoin's unique characteristics. Its absolutely finite supply, capped at 21 million coins. That's a powerful defense against inflation, right?
Yeah.
A stark contrast to fiat currencies, which can be expanded, well, indefinitely.
Right. No Burr machine for Bitcoin.
Exactly. And its decentralized, permissionless nature means it operates outside the control of any single government or central bank. It offers resistance to censorship and seizure. These properties, especially in an increasingly digital and interconnected global economy where traditional financial systems can be vulnerable to political pressures or, rapid devaluation, they make it a compelling modern candidate for a strategic reserve.
It's a different kind of asset for a different kind of world, maybe.
It offers a unique combination of features that traditional assets, with all their physical and logistical constraints, they just can't quite match.
So it's not just about finding a new investment opportunity for the Treasury. It sounds much bigger. It's more like a profound rethinking of what constitutes a secure, resilient, and truly strategic national asset in the 21st century.
Precisely.
It's almost a philosophical question, isn't it, about the nature of value itself in the digital age.
And it's important to remember, as our sources consistently highlight, this proposal isn't emerging in isolation.
Right, there's a global context.
Absolutely. It's happening within a significant and rapidly evolving global context.
Hmm.
This isn't just some domestic U.S. debate. It's part of a much larger global conversation about digital assets and national sovereignty.
Yeah, we're already seeing countries like El Salvador actively embracing Bitcoin for their national reserves.
Hmm.
And even, geopolitical giants like Russia exploring similar avenues, though maybe for different reasons.
If we connect this to the broader geopolitical picture, the U.S. seriously considering Bitcoin for its reserves, well, it signals a crucial, perhaps even inevitable, global shift.
Acknowledging a new reality.
Exactly. It's an acknowledgement of a new dimension in geopolitical strategy. What does it truly mean for a country's financial sovereignty and its influence when digital assets become a part of the national reserve equation?
Look at El Salvador, for instance. Their decision to make Bitcoin legal tender and start accumulating reserves, it was, well, audacious.
It was certainly an audacious economic experiment, driven by a desire, reportedly, to reduce their profound reliance on the U.S. dollar, attract foreign investment, and critically provide financial services to a large, unbanked population.
Right, the financial inclusion angle.
It's a bold move to establish greater economic independence, maybe even define a new national brand, though it's one fraught with both opportunities and significant challenges, which we should probably delve into a bit later.
Definitely. And then you have Russia operating under, let's say, vastly different circumstances.
Completely different contexts.
Amidst stringent international sanctions, the discussions within Russia about using Bitcoin and other cryptocurrencies for reserve diversification, they take on this urgent, almost existential tone.
It's about finding alternative avenues, really, ways to maintain economic stability and influence when traditional financial systems are effectively weaponized or restricted. It highlights Bitcoin's perceived utility as an alternative financial rail when access to conventional systems is curtailed.
Yeah, a way around the blockades, so to speak.
Absolutely. So the implications of a U.S. move here could be incredibly influential. It could create that powerful policy domino effect that our sources suggest.
Right, if the U.S. jumps in.
If a global economic powerhouse like the U.S. were to adopt Bitcoin into its strategic reserves, it could set a powerful precedent. We might see a ripple effect where other nations, perhaps those looking to diversify away from traditional reserve currencies like the dollar, or maybe those seeking to enhance their own financial resilience in a volatile world, they might just follow suit.
It wouldn't just be about economics then, but strategy too.
It's not merely about economic alignment. It's about strategic positioning in a changing global order. Such a move could fundamentally alter international financial relations, reshape economic alliances, and maybe even catalyze a new dimension of global economic competition and cooperation. It would force every nation to reevaluate its stance on digital assets.
Okay, so that's the geopolitical angle. But here's where it gets really interesting. For anyone concerned about the broader economy and, the stability of their own financial future, our sources consistently frame Bitcoin as a potential macro hedge.
That's the term they use.
A sovereign asset capable of acting as a crucial safeguard against critical economic challenges like mounting national debt, persistent inflation, and potential currency devaluation.
And this raises a fundamental question about Bitcoin's core value proposition, doesn't it? How does a decentralized, permissionless asset actually perform in times of traditional economic stress?
Right. Does it hold up?
The sources suggest it's being increasingly viewed as a viable safeguard. Bitcoin's absolutely finite supply, that hard cap of 21 million coins, is its most powerful intrinsic defense against inflation.
Can't print more.
Exactly. Stands in stark contrast to fiat currencies, which central banks can print in theoretically unlimited quantities. Its decentralized architecture means it's not beholden to the monetary policies or political whims of any single government or central bank. It offers a degree of independence that traditional assets simply cannot provide.
So imagine a scenario where a nation's fiat currency is, say, depreciating rapidly due to excessive money printing.
A Bitcoin reserve would offer a non-dilutable alternative in that situation.
And when you look at the data, our sources point to some compelling historical performance metrics.
Yeah, the numbers are interesting.
Bitcoin versus gold, for instance, and crucial correlation data showing Bitcoin's behavior as an inflation hedge versus dollar strength. specifically measured by the DXY index.
Right, the dollar index.
For those maybe less familiar, the DXY, the US dollar index, measures the dollar's value against a basket of 6 major global currencies. A strong inverse correlation, which some analyses in our sources indicate, suggests Bitcoin could truly act as a hedge when the dollar weakens.
Potentially protecting national purchasing power. These analyses offer concrete, data-driven reasons why states might consider this pretty profound diversification.
Absolutely. The core idea is that in a world grappling with mounting national debts, aggressive quantitative easing programs, and the specter of ongoing currency debasement.
Which feels like a constant these days.
It does. Bitcoin offers a mathematically verifiable scarcity that is utterly impossible to replicate. It represents a truly hard asset, but in a digital form, accessible and transferable across the globe with, well, unprecedented ease.
That makes it an incredibly compelling option for nations seeking to protect their wealth and maintain purchasing power over the long term. Moving beyond a sole reliance on fiat or even commodities like gold, which, let's face it, have their own issues.
Like mining output fluctuations, complex physical storage logistics.
Even geopolitical control, it's really about building resilience into a national treasury in a new way.
Okay, so beyond the immediate financial implications, there's a significant psychological and structural impact highlighted in our sources too. If adopted, the Strategic Bitcoin Reserve Bill would undeniably position Bitcoin as a recognized national reserve asset, which would, in turn, provide an immense push towards mainstream adoption.
Right. It's not just about the market price, then.
No, it's about a fundamental shift in perception and integration.
For Bitcoin to be embraced at this level by the world's largest economy, well, it would lend an unprecedented level of legitimacy. This is far more profound than just institutions or corporations adopting it.
That the government itself.
It's about the very foundation of national finance acknowledging its place in the global economic architecture. Government endorsement differs dramatically from private sector adoption.
How so?
Well, while corporations like MicroStrategy have bravely shown the viability of holding Bitcoin on a balance sheet, a government move would create a cascading effect throughout the global financial system. It would almost certainly lead to clearer, more robust regulatory frameworks.
Which everyone is waiting for.
Exactly. Dramatically reducing uncertainty for businesses, financial institutions, and investors worldwide.
Yeah.
That clarity is often the crucial missing piece for broad institutional engagement.
That level of clarity would be a complete game changer, wouldn't it? It would build public trust by signaling that Bitcoin is a legitimate, well-understood asset that even national treasuries deem safe, valuable, and strategically important. But, some might argue, couldn't a move like that by the government paradoxically centralize an inherently decentralized asset? What do our sources say about navigating that tension?
That's a very insightful point, and it's a tension that's certainly acknowledged in some of the reports we looked at, particularly from, say, the IMF and BIS, which often scrutinize the systemic implications of such moves.
Right, they'd be focused on that.
While a government holding Bitcoin doesn't inherently centralize the network itself, the underlying protocol remains decentralized. It does centralize a significant amount of holding power. That's undeniable.
Okay.
The legitimacy gained, however, often outweighs these concerns in the eyes of proponents. The government's actions would likely accelerate the integration of Bitcoin into established global financial systems, potentially leading to easier and safer access for everyday citizens.
So more accessibility might counter the centralization risk.
Potentially. Imagine the public education initiatives, the widespread availability of Bitcoin-related financial products, clearer tax guidance, all flowing from a government taking such a significant step. It would normalize what was once considered a niche or even fringe asset, transforming it into a recognized component of a healthy financial portfolio or national strategy. That could mitigate some of those centralization concerns through broader public access and understanding.
Okay, so let's shift gears slightly. If the U.S. government were to actually create a strategic reserve of Bitcoin, what does that mean for those who already hold Bitcoin? People listening right now, maybe. Our sources are quite clear on this. They state it would be the ultimate bullish signal.
That's the phrase used, yes.
Leading to a significant reduction in circulating supply and potentially a substantial increase in long-term value.
From a pure market dynamics perspective, this would be profoundly impactful. Any large-scale acquisition by a government, especially one of the U.S.'s economic stature, would inherently shrink the available supply of Bitcoin on the open market.
Just taking it off the table.
Exactly. When we examine the BTC supply distribution data that our sources mention, we see that a significant portion of Bitcoin is already held by long-term investors or is considered illiquid. It's not actively traded.
Oh, dealers.
Right. If a nation-state begins to accumulate substantial amounts for its reserves, it effectively removes a considerable quantity from the active trading supply. This creates immense upward pressure on price. It directly impacts the classic supply and demand curve, especially over a long-term investment horizon.
And these wouldn't be quick flips either.
Highly unlikely. Such large holdings are unlikely to be quickly resold, which could effectively establish a new floor in valuation, fundamentally altering market psychology and increasing confidence. It suggests that a major sovereign entity views Bitcoin as a persistent foundational asset.
Okay, but it's easy to focus solely on Bitcoin here. Our sources also look at the wider crypto market. They suggest that altcoins could follow Bitcoin's momentum as institutional capital trickles into the broader ecosystem.
Right, the rising tide lifts all boats, maybe?
So the ripple effect from a U.S. strategic reserve wouldn't stop at just BTC. It would likely spread.
This is a classic halo effect scenario, but potentially on an unprecedented scale. A significant move like this from the U.S. government wouldn't just solidify Bitcoin's legitimacy, it would also pave the way for more traditional capital to enter the entire digital asset space.
How so?
Well, once Bitcoin's position as a sovereign asset is established, institutions that were previously hesitant, maybe due to regulatory uncertainty, lack of clear guidance, or just perceived risk, they might become much more comfortable exploring other digital assets.
Okay, that makes sense.
This raises an important question, though. If the U.S. adopts BTC reserves, which altcoins do you think would benefit most?
Good question. What are your thoughts based on the sources?
My initial thought, based on the themes in our sources, would be those with strong fundamentals and clear institutional appeal. You know, so-called blue chips, perhaps?
Like Ethereum?
Potentially. Established ecosystems like Ethereum, particularly with its transition to proof-of-stake focusing on scalability and sustainability. We might also see increased interest in projects focused on enterprise blockchain solutions or those providing crucial infrastructure for decentralized finance, DeFi.
And stablecoins too, presumably.
Absolutely. Stablecoins would likely gain further traction if the regulatory environment for digital assets as a whole becomes more transparent and favorable. The capital would probably trickle down from Bitcoin into these more established altcoins first.
Right. Now, for those actively trading in the crypto markets, the sources suggest a very different and perhaps more, let's say, nuanced dynamic.
Yes, the trader perspective.
In the near term, there's likely to be intense speculation. The market could rally sharply on positive headlines.
For sure.
However, it's also clear that volatility spikes are to be expected around legislative updates, committee hearings, political debates. So definitely not a straight line up.
You're absolutely right. Traders often operate on significantly different time horizons than long-term investors or HO dealers.
Day to day, week to week, maybe.
Exactly. Legislative processes are inherently uncertain, often protracted, and subject to delays, intense debates, numerous amendments. All of these stages create opportunities for significant short-term price movements.
We've seen this movie before, right?
We've seen this dynamic play out repeatedly with past crypto bills introduced in the U.S. Congress and with major regulatory events like spot ETF approvals or changes in tax regulation. The buy the rumor, sell the news phenomenon is well established in crypto markets.
Definitely.
News of the bill's introduction, committee hearings, even carefully worded comments from key lawmakers could trigger significant rallies based purely on optimistic speculation.
And the flip side.
Conversely, unexpected delays, unfavorable amendments, or even outright rejection at various stages could lead to sharp pullbacks. This creates a highly volatile environment where swift reactions to news and understanding the legislative nuances are critical for active traders. It really highlights the importance of closely following that legislative timeline referenced in our sources.
Okay, let's talk about the digital gold narrative again. It's not new. As we said, it's been foundational for years.
A core part of the Bitcoin story.
But our sources suggest this strategic Bitcoin reserve bill could solidify its place in a fundamentally new way. Bitcoin may become the digital gold embedded in sovereign reserves. And that takes the narrative beyond just a simple comparison, right? It firmly places it within a national financial strategy.
It does. This concept pushes Bitcoin far beyond a speculative asset and firmly into the realm of a legitimate store of value, directly comparable to physical gold, but crucially, with the distinct advantages of a digital native asset. It's about establishing a new paradigm for national wealth management.
And when you critically compare Bitcoin's properties against physical gold, specifically for state reserves, the differences become, well, pretty stark and compelling.
They really do. Gold is heavy, it's difficult and costly to transport, expensive to secure in physical vaults, and its authenticity can sometimes be challenged.
Right, fake gold bars and all that.
Bitcoin, on the other hand, is infinitely divisible into tiny fraction satoshis. It's highly portable across borders with near zero friction and minimal cost. Its scarcity is mathematically verifiable through its protocol, and all transactions are transparently recorded on an immutable blockchain.
So it offers the core benefits of gold scarcity, store of value, but in a more efficient, modern, and arguably more secure form for a digital age.
That's the argument. Our sources extensively reference research from institutions like CoinShares and ARK Invest on Bitcoin as digital gold, which delves into these very comparisons, highlighting its superior characteristics for a digitally interconnected world.
It really makes you wonder how much our concept of money and value has evolved just in the last century alone.
Exactly. For state reserves, these attributes are incredibly compelling. The ability to hold vast wealth in a secure, easily transferable, and auditable format without the immense logistical and security burdens of physical gold makes Bitcoin an attractive alternative.
It's not necessarily about replacing gold entirely, though.
Probably not entirely, no. More likely offering a complementary and in many respects superior digital alternative for a significant portion of a nation's strategic assets, particularly in an increasingly digital and interconnected global economy. It isn't just about efficiency, it's about resilience and adaptability in an unpredictable world.
Okay, so what does a potential U.S. adoption of Bitcoin reserves mean for the rest of the world? We touched on this, but our sources predict a significant policy domino effect.
That's the term, yeah.
If the U.S. adopts BTC, other countries are highly likely to follow suit. This could be a truly global, transformative shift, potentially changing the face of international finance.
The U.S. holds an undeniable and significant sway in global financial policy, technological innovation, and economic influence. A move like this wouldn't just provide a powerful template, it would, at the very least, create a strong impetus for other nations to seriously consider similar strategies. It's not just about economics, but also about sort of keeping up. It's about strategic positioning in a rapidly changing world. We might see countries in the G7 or G20, perhaps those with strong technological innovation agendas, or those actively looking to bolster their economies with new financial instruments, being particularly influenced.
And what about emerging economies?
Well, emerging economies, especially those maybe struggling with less stable fiat currencies, high inflation, or seeking greater financial independence, could also view this as a viable path towards greater stability, following the example set by a global leader. It would effectively de-risk the concept for many who are currently sitting on the fence.
Right. Now, beyond just Gitcoin, this bill could have profound effects on the broader Web3 space. Specifically, you mentioned decentralized finance, DeFi, and the growing trend of asset tokenization. Our sources indicate that governments holding Bitcoin could accelerate both regulatory clarity for the entire sector and the rise of tokenized treasuries.
This raises a critical question about the long-term vision of a truly digitized global financial system. Regulatory clarity is consistently highlighted as the single biggest missing piece for broad institutional adoption of DeFi.
It's the bottleneck.
It really is. If governments engage with Bitcoin at this level, it fundamentally suggests a path toward clearer, more harmonized rules for all digital assets. Such high-level governmental engagement would almost certainly necessitate a robust and clear regulatory framework around digital assets.
Which in turn would
Unlock new use cases, attract vast amounts of institutional capital into the DeFi space, and move it from a nascent, somewhat chaotic environment to a more mature, integrated, and credible part of the global financial system. Imagine the efficiency gains and new financial products that could emerge from that clarity.
And the concept of tokenized treasuries is particularly intriguing here. Can you explain that a bit more?
Sure. It refers to digital representations of government bonds or other national assets issued and managed directly on a blockchain.
Sounds futuristic.
It does, but it's becoming increasingly tangible. If governments begin to hold Bitcoin, It demonstrates a sophisticated understanding and acceptance of the underlying blockchain technology at the highest levels of state finance.
Okay.
This understanding could then catalyze the development of tokenized treasuries. This isn't just theoretical. Imagine a government needing to raise capital quickly, maybe for infrastructure projects or to manage debt.
Right.
They could potentially issue a tokenized bond directly on a public blockchain, making it accessible to a global pool of investors, 2047, settled almost instantly without needing layers of traditional banks, brokers, or custodians.
Wow, cutting out the middlemen.
Exactly. That level of efficiency, transparency, and global accessibility could revolutionize sovereign debt markets, making them more resilient, liquid, and fundamentally more connected in an increasingly digital world. And he could all be underpinned by the governmental embrace of a foundational digital asset like Bitcoin.
Okay, let's try and ground this theoretical discussion in reality a bit more. Our sources point to a compelling national test case for sovereign Bitcoin holdings.
El Salvador.
Exactly. El Salvador's groundbreaking move to make Bitcoin legal tender and actively accumulate reserves provides invaluable real-world data. It gives us a unique glimpse into a nation fully embracing a Bitcoin strategy.
El Salvador has truly been a pioneer here, no doubt, facing both fervent praise and, let's be honest, sharp criticism for its bold stance.
Yeah, it's been controversial.
Examining their experience provides crucial real-world insights into the practicalities, the opportunities, and the significant challenges of sovereign Bitcoin holdings. Their motivations were multifaceted, as we touched on, promoting financial inclusion for a largely unbanked population,
Right.
attracting foreign investment through a novel economic model, and crucially, reducing their profound economic reliance on the US dollar, which is their official currency.
And the outcomes so far.
Initial outcomes have been decidedly mixed, marked by significant volatility in their Bitcoin holdings and ongoing debates about the actual economic impact on ordinary citizens. However, their experiment has provided invaluable empirical data on implementation challenges, citizen adoption rates, the technical infrastructure required, and the macroeconomic effects of a nation-state fully integrating Bitcoin into its financial system. It's really a laboratory for the rest of the world.
Okay, now for a very different context for Bitcoin consideration, as our sources highlight, Russia.
Completely different situation.
We've seen discussions within Russia about using Bitcoin and other cryptocurrencies for reserve diversification, particularly in the difficult context of international sanctions. This really shows how geopolitical forces can drive innovation, or at least consideration of alternatives.
This specific case highlights Bitcoin's perceived utility as an alternative to traditional financial systems, especially when those systems are effectively, well, weaponized. It underlines Bitcoin's potential role in a sovereign nation's ability to navigate severe geopolitical pressures. While there have been debates within Russia, the central bank being more cautious, the finance ministry perhaps more open to crypto for international payments, the discussions underscore Bitcoin's potential as a tool for economic resilience in the face of isolation.
It's that circumvention aspect again.
The implications of using decentralized assets to circumvent traditional financial controls are significant. It offers a potential path for nations to maintain critical economic activity and stability, even when cut off from established global banking networks like SWIFT. This demonstrates Bitcoin's unique position as a neutral, global, and uncensorable asset, which can be both a powerful tool for financial freedom and, well, a complex instrument in geopolitical strategy, depending on your perspective.
Now back to Michael Saylor. Our sources clearly identify him not just as a proponent of this bill, but as the pioneer of an entirely new corporate Bitcoin strategy.
He really led the charge.
Leading the charge for corporate Bitcoin reserves through MicroStrategy's groundbreaking treasury model. It was a bold move that raised many eyebrows initially.
Indeed. MicroStrategy's strategy effectively demonstrated that a publicly traded company could successfully integrate Bitcoin into its balance sheet, treating it as a primary treasury reserve asset. This set an incredibly important precedent that governments are now potentially considering at a much larger scale.
And the results for MicroStrategy.
When you meticulously examine MicroStrategy's BTC portfolio growth versus traditional benchmarks like the S&P 500, as highlighted in our sources, it showcases a significant, almost audacious impact on shareholder value. It illustrates the potential benefits of such a strategy when executed with conviction.
So it provided a proof of concept.
Absolutely. This corporate-level adoption served as a crucial large-scale proof of concept. It showed it was possible to responsibly acquire, hold, and manage a substantial Bitcoin treasury within a regulated corporate structure. This pioneering effort has undoubtedly paved the way for larger entities, including sovereign governments, to seriously consider similar moves, providing a real-world blueprint.
Now, looking back to traditional assets often helps us understand the present, and our sources draw some compelling parallels between the current Bitcoin discussion and historical patterns like China's extensive gold accumulation over the past few decades.
This is a critical historical analogy because it reminds us that national reserve strategies are never static. They evolve.
Right.
Nations have always adjusted their holdings based on evolving economic and geopolitical shifts. Bitcoin, in this context, is simply the latest asset being considered for these strategic shifts, much like gold has been in the past.
And China's motivation for buying gold.
Varied, but often driven by a desire to diversify away from its massive holdings of US dollar-denominated assets to enhance its financial sovereignty and to bolster its position as a global economic power.
And those same motivations could apply to Bitcoin today.
Absolutely. Those very same underlying motivations, diversification, independence, strategic influence, could absolutely be applied to a nation's consideration of Bitcoin today. Historically, nations shifted from silver to gold, then to fiat currencies often backed by gold, eventually to purely fiat systems. The consideration of Bitcoin is arguably just another evolutionary step in this long, dynamic history of national reserve management, driven by similar underlying desires for security, stability, and strategic advantage in a new era.
Okay, finally, our sources highlight concrete examples of Bitcoin's growing integration into traditional finance right here in the U.S.
Yeah, happening right now.
Institutions like Fidelity, a giant in asset management, are already moving in this direction with their pro-Bitcoin retirement offerings. This isn't some niche startup, it's a mainstream financial behemoth.
And this points to a broader, undeniable acceptance of Bitcoin within the regulated financial industry. It creates a foundational layer of legitimacy and infrastructure that could eventually extend to government-level adoption. It demonstrates a growing institutional comfort with the asset, which is a crucial step towards broader integration.
So when a major player like Fidelity steps in,
When major financial players like Fidelity, a long-standing and highly respected asset manager with millions of clients, offer Bitcoin as part of retirement portfolios, it signifies a profound level of due diligence, regulatory compliance, and client demand. It effectively legitimizes Bitcoin for a vast swath of mainstream investors.
reduces the perceived risk.
Definitely. It provides practical pathways for individuals and corporations to gain exposure, and thereby builds a crucial bridge that government strategic reserves might eventually cross, making the leap feel, well, less radical.
Okay, to ground our discussion in concrete terms as we head towards the end, our sources highlight several analytical frameworks that are absolutely crucial for understanding the core arguments supporting the Strategic Bitcoin Reserve Bill.
The data points.
Exactly. These include detailed BTC supply distribution data, which shows exactly how sovereign holdings could effectively shrink the circulating supply. We also see historical BTC versus gold performance comparisons demonstrating its potential value as a hedge. Then there's MicroStrategy's BTC portfolio versus S&P 500 benchmarks, showcasing that real-world corporate success story. And finally, correlation data, BTC as an inflation hedge versus dollar strength DXY index, highlighting its potential macroeconomic role.
These metrics are indeed foundational for making informed decisions regarding Bitcoin's viability as a reserve asset. They provide empirical evidence for Bitcoin's potential and help us understand its historical behavior relative to traditional assets and key economic indicators.
Can you give an example?
Sure. A deep dive into the existing BTC supply distribution, for instance, illustrates just how significant a sovereign purchase could be in terms of removing coins from liquid circulation. It impacts market dynamics in a way that mere anecdotal evidence can't convey.
Quantifying the supply shock.
Precisely. Comparing Bitcoin's performance directly against gold or the S&P 500 offers a quantitative basis for evaluating its role as a store of value or a growth asset, showing how it performed during specific periods of market stress or fiat inflation.
And the correlation with the DXY.
Analyzing its correlation with the DXY index provides granular insights into its potential as a non-correlated hedge against fiat currency weakness, which is a primary ongoing concern for national treasuries struggling with debt and inflationary pressures. These are not just numbers, they are arguments in data form.
Okay, so after all this discussion, what are the next steps for a bill of this magnitude? It sounds like a huge undertaking.
It is.
Our sources extensively reference the legislative timeline past crypto bills introduced in U.S. Congress, including examples like ETF approvals and tax regulation, which gives us some indication of the complex and often lengthy journey ahead. It's rarely a quick sprint to the finish line, is it?
No, it's rarely a quick sprint. It's much more like an endurance marathon through a political obstacle course, especially for something as novel and potentially impactful as a strategic Bitcoin reserve bill.
So what does that process typically look like?
Understanding past legislative efforts around crypto, whether it's for ETF approvals or tax regulations, helps us anticipate the potential hurdles, the nature of the debates, and the probable timelines. Typically, a bill must first be formally introduced by a member of Congress, then assigned to one or more committees for review and debate.
Hearings markups.
Exactly. If it passes committee, it moves to a floor vote in both the House and the Senate. And only if it passes both chambers in identical form does it then go to the president to be signed into law.
And each stage takes time.
Each of these stages can take months, sometimes even years, and is subject to intense lobbying efforts, public debate, and political maneuvering from all sides. For a bill proposing to redefine national financial strategy, we could expect significant bipartisan debate, drawing upon insights from various government bodies, economic experts, and of course, the crypto industry itself.
Our sources even point to detailed Congressional Research Service reports on crypto legislation.
Those CRS reports are invaluable.
They beautifully outline this complex, multi-stage process, giving a real sense of the institutional machinery at play.
They often detail the various stages, the constitutional considerations, and the intricate policy implications of new technologies like cryptocurrencies within the existing legal framework. For a bill proposing a national Bitcoin reserve, the discussions would invariably touch upon critical areas like monetary policy, national security, international relations, and financial stability.
So it's a big deal with lots of angles.
Which makes the journey through Congress particularly intricate and likely prolonged, with multiple opportunities for amendments, revisions, and public comment periods. It's a thorough, if sometimes slow, process designed for significant changes like this.
Okay, and for those of you listening who want to dive even deeper, our sources point to a wealth of foundational information that underpins this entire discussion.
Yeah, there's a lot out there.
This includes crucial reports from the bloc, which often detail Saylor's initiatives, and the Bitcoin Reserve Bill itself.
Very timely reporting there.
MicroStrategy press releases on their own Bitcoin strategy, comprehensive IMF and BIS reports on digital assets and reserves, giving that global institutional view.
Right, often highlighting the risks, too.
And the insightful CoinShares and ARK Invest research on Bitcoin as digital gold.
These foundational research materials are precisely what allow us to have these informed and detailed discussions. They provide the economic models, the deep market analysis, and the policy considerations that underpin the entire debate.
Different perspectives are key.
The block gives that timely pulse. MicroStrategy's releases show the corporate precedent. IMF and BIS offer the central banking and global financial perspective, often balancing opportunities with systemic risks. And firms like CoinShares and ARK Invest provide that in-depth, often pioneering analysis on Bitcoin's fundamental value proposition compared to traditional assets. Collectively, these sources offer a comprehensive, multifaceted view necessary to understand the full scope and implications of this proposed legislation. #outro.
Wow, what an extensive deep dive into the strategic Bitcoin Reserve Bill. We've covered, well, pretty much everything from its fascinating origins in Washington to its potential global impacts, the implications for existing investors and the broader crypto ecosystem, and those crucial historical precedents that really illuminate its significance.
It really is a moment of profound consideration.
It is, thinking about how nations will manage their wealth and financial resilience in the future.
Indeed. And this entire discussion raises an important overarching question for all of us, doesn't it? The serious consideration of Bitcoin at a sovereign level isn't just about integrating a new asset class.
No, it's bigger than that.
It's fundamentally about a reevaluation of national financial strategy in a rapidly digitizing and interconnected world. What does the future of currency, of national treasuries, and of strategic reserves truly look like? Will it be a blend of traditional assets and digital ones? Or are we on the cusp of a more radical, paradigm-shifting transformation?
That's a truly powerful thought to leave you with, and something we definitely encourage you to ponder. Do you think the U.S. government will actually move forward and buy Bitcoin for its strategic reserves? Or is this ultimately just political theater designed to test the waters?
A big question.
And if it does happen, what would that mean for your own financial outlook, your investments, and the global economy as a whole? We'd genuinely love to hear your thoughts. And speaking of engagement, we just wanted to take a quick moment here at the end to say that subscribing to our channel, leaving your comments below, and interacting with discussions like this, it really makes a huge difference.
It really does.
It genuinely helps support the deep dive, boosts our visibility in the algorithm, and most importantly, it lets us keep creating this type of quality, in-depth crypto content for you.
We appreciate you tuning in.
We truly appreciate your engagement and for being a part of our community. Thank you so much for joining us on this deep dive.